got the stocks. I got the markets. I got the stocks up right now.
All right, we are live. Yeah, so Bitcoin, it's interesting. So there's a correlation between that and the stimulus checks.
Yeah. So guys, we're talking about for this live stream. We're talking about stocks and some crypto. Oh, give me a second. Sorry about that. Let me turn off my cell phone.
Oh, and this episode, this is the Ghosted YouTubers podcast because we've had so many channels just ghost us. I think we've lost count, like probably 5 at least. Yeah. It's crazy.
Yeah, we should ask Patrick to get on and see what he says.
Yeah, that way he could actually have a channel that he's on because he's not on any channel.
Yeah.
Yeah.
But for the stocks, guys, we're covering really popular stocks that I think everyone should know about, and to see what we basically just to cover them. They're really popular: Microsoft, Facebook, JPMorgan, Blackrock, to cover a few, and the rest we'll go through one by one, and then we'll cover crypto last.
You mentioned Meta, the good entry point. The entry point really was in October. It bottomed out. It was below $100.
Here, let me get the chart open right now for Meta.
It's actually, the whole market is coming back. It's
if you have time, actually, I'll bring up that chart.
I'm just using my iPhone. Yeah, go ahead.
If you guys watched the last press release with the Federal Reserve, they talked about pumping the market. They're going to save everybody. So if the markets are going to be saved, for me personally, this is why I bought back into American stocks, just because they're going to pump it.
Yeah,
it's an easier trade.
It's like the Fed put. It's coming back.
I mean, and one thing, guys, for the audience, if you did not know this, in America, so basically every country, there's a balance, right? There's a balance sheet. Right now, America doesn't. We blow past our budget every single year. And we can't afford, basically America cannot afford anything. We just have to basically print and live in debt. So we know, the Federal Reserve knows this. So they're like, okay, we need more money. We need to get these individuals back. And the way they make money is very, obviously, immoral. So they're going to pump the markets. They're going to make a whole bunch of money on the front end and back end. And the back end is basically that 6% dividend that they get for the Federal Reserve every year. And that's going to contribute to all the money they inject into the markets.
I actually didn't read the Fed statement where they said they were going to basically help save everybody in the markets. I mean, that's good for me. It's good for anybody with stocks.
Yeah, anybody with stocks or what else? I don't know if people with bonds it would help out, but
I'm not a big bond fan. I did get into some bonds. I put like 500 in bonds because they were at like 9%. To keep up with inflation.
I mean, me personally, I've never bought a bond. I mean, it's just never been my style to buy that kind of stuff.
Just to remind the audience here, speaking of the national debt, we're actually going to hit that ceiling again, I think, within the next week. But they know the new Congress doesn't want to raise the debt ceiling again. They said the Treasury is going to just do some tricks to keep it for the next 6 months or so. They're going to keep it above water for the next 6 months. But my thing is, so the national debt is like your credit limit as a household. So like if your total credit limit is 100,000 or say it's 50,000 and you keep maxing it out, are they going to keep increasing your credit limit as a person? No. But as a country, that's what we do. We keep on maxing out our credit limit and we keep raising it. So as a country, we can cheat. Basically, we can do what individual households can't do.
Or even countries. We're like the only country that can do this.
Yeah. It's so
Not
funny
forever,
because since I've been following this, debt per citizen is up to 94,000. Debt per taxpayer is up to almost 247,000. Funny thing is, that's triple, that's almost triple debt per citizen because a lot of people don't realize this, but not everyone is a taxpayer.
Yeah.
Yeah. So per taxpayer is a lot. That's why, they had those 87,000 IRS agents, but they just defunded them basically. So That's a good thing, because usually all the IRS does, they come after people like me and you. Like, they don't go after like the super rich. They go after like middle income people that can't really, fight
Fight
an
back.
audit. Yeah, yeah.
Yeah, and then what else I tell people, like, this is just the face value. They don't talk about the budget, not the shadow budget, what's called the non-disclosed budget. Like, there's a whole bunch of things that's not on this budget, and with interest payments, we would see this at, where's that 30 plus
If the
trillion
interest rates were what they should be.
interest on the debt.
It's like, could you imagine like making money like this? Like, just in the last few seconds, it goes up. Look at that. It's up 100,000. It goes up like 500,000 in like 10 seconds.
Oh, there it is.
It's crazy.
90 U.S. total debt, 93 trillion. Woo!
Yeah, total. If you added like unfunded liabilities.
Thank you, unfunded liabilities. I was trying to say that.
Yeah. So that's like basically all our programs, like Social Security, Medicare, and all that. They're not fully funded for the population. Like, when like our generation gets to retirement, it's not. At this point, those programs are not funded to actually be there.
It won't be there.
Yeah.
I mean, if the dollar exists by the time we're in our 60s or 70s to claim it, it would be worth maybe 0.000, like the zeros would be like, we're not even worth 10 cents now.
Right.
$1 is worth like almost like 5, 6 cents. That's the only thing that's left. They can keep doing it, and then the dollar will be worth a penny, and then our purchasing power would be nothing. Oh.
Crazy.
All right, I got the chart up. Let me see. Actually, you can bring up a chart here. I got Facebook open to check it out, since it has a pretty sweet PE ratio. Very rare. 10.6. It's actually in my personal zone.
That's why a lot of people say it's like one of the best buys. But it's up since October. It's up like 50%, because it was at $99 a share. It's up 50% since then. Netflix also. Netflix, I thought they had a really tough year last year.
Put that on the list.
Oh, here you go. Yeah, well, I don't know, because it's already come back, basically.
And it's not going to be on my. It's funny. Big companies are usually never on my radar. I know. Like, when it comes to like our current list, I personally, the only company that I looked at on that list is Blackrock. That's the only one. Everything else, because Blackrock, if you guys did not know, Ukraine is going to be helped and supported by Blackrock. So I think it's a good idea to get into it, because our politicians are in it.
Yeah, it makes sense. Oh, they have like a paid membership if you want to see what they have it valued at. Actually, for that, I just look at like Yahoo Finance.
Yeah, Yahoo Finance is always good. I like to see the insiders.
Oh shoot! I'm showing too much info here.
They have your email.
Yeah.
Let me see.
I tried to launch. I was going to launch. Oh, go ahead. Yeah.
I'm sorry. Hey, if you scroll down, people can see the chart. Up 3.66%.
Oh, I've got to get rid of this sidebar here. Let's see. There we go.
Look at the. Holy crap! Look at that. Everything is bouncing up.
Yeah, that's what I'm saying. But as far as this one, look at like early November. Last year. Let me go back. Oh, this is the whole. Let's see, 1 year. Yeah, so look at October 23rd. It bottomed out. See. And it's up like 50% since.
I think. I mean, to be honest, like, if I had to like say what's a fair value company, like if this Meta, once the markets actually crash and the Federal Reserve can't save it, like they can't save it anymore, all faith into the system, it's basically shorted or like just sold off. You can see Facebook at like $20.
Oh, really? If
Yeah,
like
once it. Oh, go ahead.
if everything played out.
Well, it's going to have to. The Fed can't paper over it forever.
Right. Oh yeah, if that ended, for sure.
Yeah, once that ends, and it's not. I mean, they can't do it forever. Like they'll save Facebook maybe for a few months, but I think that most companies, especially on our current list, you can see 90% lower.
Mm-hmm.
Easily 90% lower.
That's crazy.
I can't wait because that's when you buy stocks. Like I can see why people are bought. Oh, what?
When I mean, it's already crashed a lot. I mean, when do you think that would happen?
You'll see once. So let's go back to like the 2008 crash.
Mm-hmm.
You need the media. You need everything in place to do the exact same thing. Because right now the media saying that we're in a boom still. Like I watch the news, watch CNN, and we've been in a recession for a very long time, but they'll change the definition. They'll do whatever they can to make the people perceive that we're not in a recession.
Right.
So even if Meta basically went down from like $400 down to $100, yeah, it crashed, but the media won't make people feel that way. They won't make them think that way. So for me, I would wait. I'm going to wait until all these companies bottom out to near very, very low amounts. Like you're talking about the 2013 price, $20, $30. That's what I see most of the market heading down to.
I actually remember when Facebook, when it was called Facebook, when it first went public, it was actually the first stock I ever bought like 10 years ago. And then it crashed all the way to like $18 a share. And then they did like another underwriting, and then the stock started really going up. And I sold it when it was like 100 and something, and then it kept running. It got up to like, has it split? No, it got up to like $300, almost $400. Yeah. So if you had bought when it was at that price, I mean, you would have made like 1,000% return.
Holy crap! Yeah, I mean, I can see people doing that, but I mean, me personally, the only stock that I ever did something like this on, like really, really amazing, is this Lockheed Martin. It's the only
that's always a good one. Yeah.
Yeah, because especially when I was in the military, that's the only reason why I bought that stock, because I was in the military. Like there was no like, hey, this company's doing amazing. I was like, I bought Lockheed Martin because I was in the military. If I'm gonna be serving, basically, machinery, or working with missiles and stuff, or any of that, just buy into what you're going to be using.
Right. That stock. Gosh. I mean, I'm looking at the iPhone here, but I'll pull it up here. Yeah, that stock since 2012, it's way up. It's like a J curve.
And how I say this, for the audience, if you guys have time, look at any military company any company that deals with the military, and look at any type of package for the government puts out for the military. You'll see that they're pretty much hand in hand.
Oh, for sure. Yeah, it's like free money.
Free money for them.
Yeah, the defense industry.
Let me see. So we get. I think that there is one defense company ish that's going to be BlackRock. But before we switch off of Facebook, guys, the reason why I brought that up, because one, their PE ratio is pretty good, 11.86, earnings per share $10.61, and that range, because that basically had a big massive growth. So if you guys are looking for basically some gains, maybe short term in the next year, maybe Facebook something you want to look into. For me, I mean, if I had to trade it, you can possibly see it go up to the 170s. I mean, that's a strong gain. You're talking about $40 per share.
Well, if these just get back to where they were, like, so Facebook has already, like I was saying, it hit like 99. It's already up like 50%. It's up to 136. Honestly, I think it could be even higher if it's going to get back to like where it was. I mean, if the Fed just reverses course and then everything just goes back to its insane valuations, it would. There's no reason for it not to get right back to where it was, basically.
Yeah, probably relatively fast too, and interest rates might get cut.
Yeah, that's what I think is coming. I just wish, like, so in a perfect world, if you knew that, okay, now, everything's going to come home to roost. Like now the Fed is going to, like this paper system's over, basically. If you knew that, if you had the memo that was coming in like 5 years, like would the game plan be to like let everything peak out one last time, sell everything, and then convert everything away from the dollar into like metals or something like that?
I would say, so what I know they're doing, because central banks report what they buy for their class one, tier one assets. They're not buying cryptocurrencies at all. So if you want to know, I think that a guaranteed bet win would be precious metals, stocks be short-term win, and then they'll probably exit their position. And banks, they'll exit their position pretty much all at the same time. And I think long-term they're going for long-term outside of precious metals, maybe a new currency. Like maybe that currency is going to happen. Yeah, that new currency switch is going to be interesting, because I think the only asset class that will survive and possibly profit is just precious metals. Because every time they switch currencies or switch the the backing of it, precious metals always have done good. But we'll see. I don't want to be in the States during that time frame.
Right.
But Meta. What else before we go to Meta? What's like the holders? Who's buying up? Who owns the most of it since last quarter?
Oh, institutionally. Here, take the screen share.
Yeah, I always forget how to do that.
Let me stop sharing here, and then you can take control.
Oh, okay.
Yeah.
I got it.
Yep.
Yahoo. I'm on. I'm doing it from my screen on. So I gotta share the correct screen. Finance. Yeah, like if I got 5 screens, so I'm like looking everywhere. Meta. Come on, Meta. I wish I did buy these big companies.
Yeah.
The game would have been pretty good.
I'll tell you the best gain.
Interest is in uranium.
Right. But the best gain,
I'll go.
if you know the market is going to recover, which it already looks like it is, there's this ETF called the UPRO, ticker symbol UPRO, and it is indexed to do three times the S&P 500. So if the S&P is up like 30% this year, this fund will do 90%. But even better than that, this fund is optionable. So then a fund that's already indexed to do 3 times the S&P, if you trade options on it, you can easily, if the S&P is going to go up and you know it's going to go up because of that Fed put, like I call it, then it's like cheating. I mean, then you can make massive gains quick, because the options, you're going to 10x whatever the stock or the index is going to do. So if it's already indexed to do 3x the S&P, and then you can 10x from there, it's insane. What is that, like a 30x?
Is that like a leveraged ETN or ETF?
Yeah, it's leveraged. Yeah. So when the S&P's down, it's down 3 times, like last year, which I was in it last year. I've been in it for a while, but I've added to my position. But I mean, because it's optionable. Huh? Oh, here's
you talking about cash or just an option trading?
Option trades. Yeah. So it's optionable. So then the options, if you're going to buy like 10 contracts, you could set up like a massive gain.
Ooh, look at Blackrock. Isn't it weird? Look at this. Look. Date reported September 29th, right? That's their last filing date for it, pretty much. I wonder when BlackRock and Vanguard entered.
When they entered what?
when they entered Facebook. Isn't it kind of?
Oh, there's a correlation. Yeah, because they're buying shares, right?
Yeah.
Mm-hmm.
Morgan Stanley. I mean, I see how they own 1%, 2%, 3%, but these 8%, that's pretty big.
Yeah.
God, Facebook. And I get my light in front of me. These Vanguard doesn't have that much, but I'm sorry, this Vanguard, wow, that is crazy. 8%. Number of institutions holding shares, 3,000. Holy crap. 76% of major holders. This is crazy.
BlackRock, yeah. But
BlackRock,
there's a lot of upward momentum on the stock. I mean, if these institutions are getting in, right?
That there's going to be a big push. I mean, I can't get a part of this company like that. I mean, it's difficult for me to trade it. Like, I mean, I can say like, hey, I'm going to put an order in. Yeah, I can buy, but I typically would have to have my computer trade it for me. It's been, that's like, if you guys do not know, I trade by expert advisor far more than I trade by hand. It basically controls everything, so I don't have an emotional input. Ugh. And I think if you guys have not traded, I think everyone has done an emotional buy before and taken a loss.
Oh, for sure. I've done that with options trading. I had to stop myself because it was almost like I had a gambling addiction.
Yeah, but I'm saying I burned multiple live accounts and demo accounts just because I saw greed, and that's why I trade so much by EA, just because of all my issues.
So that's expert advisors.
Yeah, the only stocks that I do by hand is dividend stocks. It's the only ones that I 100% will just go through and read every detail about the company.
Yeah, because at least you have a guaranteed return.
Meta is just capital gains, and it definitely can, if once the Fed stops injecting currency into the system, Meta might go head down a whole lot lower, but we'll see. But that's Meta. Let's look at, we have Microsoft, JPM, Tesla. Which one do you want to go through?
Oh, Microsoft. Let's look at that next. I actually got into some of that. It was stupid. Like I wanted to buy in 2017, but I felt like it was too high back then. I've done that with a lot of stocks, actually. I remember Amazon. I thought in 2013 it was overvalued, and it just kept rolling and rolling, and I felt dumb for not buying in 2013. But I keep telling myself I'm not going to do that again.
We'll see. I mean, these big companies like this is something. I mean, people can, like, Microsoft's not doing bad. Like, they have a 25 for their PE ratio, so 25 years out. Earnings per share is pretty. I mean, to me, it's kind of low.
Everything basically bottomed out in October. If you look at a year out, if you go back a year, everything like bottomed out in October. So like if you go to 1 year in the chart, or you can just go back to Yahoo, or you can do it there. Yeah, see in the chart, you can actually hover over the chart. Yeah, 1 year. Yeah, so click that and then or X that out. Yeah, so click like 1 year in the small chart there. See October or early November. See how it bottomed out.
God, Chrome.
Yeah. Chrome.
Look at that gap. Ooh.
Yep.
No, this gap right here, my computer would have caught it.
Oh.
Look at that.
That was
I can see this right here. This is good. This is this is Hammurabi's, almost close to a Hammurabi's reverse. This candle right here.
Interesting, yeah. But there's this gap, like between when it's in red here. There's like this gap.
How much is it? $9 gap, almost. $10 gap.
So something happened in after hours trading.
Yeah, especially with this reversal right here. This to be open and closed within the red candle. You get an inverse hammer showing bullish sign, almost an inverse hammer. Woo! And no body. I'm sorry, no wicks. Yeah, this is going to be pushing up higher. Definitely, Microsoft will be pushing up higher.
Within the next like 3 to 6 months, you think?
At its current trajectory, I think it will definitely push out higher than this high. But not just for that reason. I think the primary reason is that its ex-dividend date is next month.
Oh, that usually.
Let me see.
Yeah, so earnings is coming out January 24th. Yeah, when is the ex-dividend? Does it say it here?
Yeah, February 15th.
Oh, okay.
Next month.
Yeah.
Yeah, so next month, I mean.
Yeah.
Let me see, how much is theirs?
What's your take on when the ex-dividend date hits? Like, so that's paid directly out of the stock price, but, oh, I see it. It's right in front of me at February 15th. Yeah.
I think a lot of people are going to jump in prior to that. This move up to get to that
to
get that
the dividend
payout.
Yeah,
I mean it's a small amount, but I think dividend hunters, well, they're not going to miss that move.
That's one thing that drives it, and the other thing is earnings. Especially for option traders. Like, actually, if you're going to do a call option on Microsoft, now might be, what are we, a week out? That might be, if they beat earnings, let me look at how they've done. They beat last quarter. This quarter, if you know how to see that on Yahoo, if you scroll, you have the other tab. Yes, so scroll to the bottom there. Yes, scroll down.
Okay.
Keep going.
Well, I put it down here, huh?
You might have gone too far. Or you're on a different. Yeah, you went too far because earnings is actually. Yeah, go back up. Higher. Right there. See the circles. So it beat last quarter, but the projection, which is the hollow circle, it's not projected to be too much further up. So they could easily beat that. And if they beat that, then that's positive momentum for the stock. So that's good for the call option price. So that could potentially be a good play. Not advice, but could potentially be.
Oh no! Basically, I tell people, like, when I look at stocks, I'm looking to buy for myself, and I just talk about what I'm going to do. Here, I'm bringing up the chart for Microsoft, their dividend payout history on a it's like ever since every StreamYard, things like slows down a lot.
Oh, does it?
Okay, here we go.
They pay quarterly. Yeah.
That's fine though.
Actually,
cool. I'm thinking about dividends, guys. What? For me, when it comes to dividends, I like to mix quarters and quarterly and monthlies. Usually monthlies to me are a little bit more volatile, but I kind of like pair them up so I'll cycle my monthly dividend payouts to buy more into the quarterly dividend payouts.
See, for me, this is a crappy dividend yield because
here's the chart for Microsoft. Okay.
This is a crappy dividend because it's like 1.14%. I can get much better in an ETF. Like if I get JEPQ or even the QYLD or SVOL, like those are paying 12 to 15%. So if I want dividends, I'm not going to hold Microsoft for the dividend. I mean, I'll take it if I'm in the stock, but I'm not going to hold it for this dividend. 68 cents a quarter on $240. That's, it's not going to get the job done, so to speak.
Yeah, but if you've been in it for years, that growth has been, woo.
If you reinvest it, yeah.
Yeah, look at this right here. Like if you look at the last 10 years, dividends higher each quarter, each year. I mean, that's
it's what they call a dividend aristocrat. It keeps growing.
Yeah,
Well,
what
for me,
I
you know what I
like.
was doing before the market crashed. I was actually I stopped the dividend reinvestment into these stocks like Microsoft or Blackstone or Apple because they were at all-time highs. So I took the cash and used it to buy other stuff that was lower.
Mm,
Yeah.
yeah, that's actually. I wish more people would do that. Actually, take profits. Taking
Hmm.
profits is like a. It's not. It feels like it's not common. People just try to ride it out until it hits some impossible number. But
Hmm.
taking profits has to happen.
It's funny, you know that channel, that channel Strongman Finance. He hates dividends.
Yeah.
Yeah. He
Why?
puts out videos like well he's an accountant, so he talks about how basically it comes off the company's cash flow, like it means that the
Mhm.
company has nothing better to do with it, and it's taxable, which it is, and a brokerage account is taxable, but do it in an IRA if you're worried about tax.
Yeah.
Because like what I always say, if you're getting taxed, what does it mean? It means you're making money, which is a good thing. But
Mhm.
yeah, I don't mind the tax ramifications. I think it's stupid. Like if you reinvest it and you get taxed on it, it's like you're not touching the money, but you're paying tax on it. So it's like, oh, I gotta I gotta come up with this money to pay tax on these dividends that I didn't touch, because they're considered income. But if they're in a Roth IRA or a traditional IRA, you're not going to get taxed on them because it's inside the account.
Yeah. That whole. I don't want to go down that rabbit hole. Why I think there should be no taxes on these things, but
I agree.
yeah.
Yep, I
This
agree.
is. But
Actually,
if we go back,
the first year that I ever dividend invested, I didn't even know I was supposed to pay tax. That's how I got my first letter from the IRS. I got one of those nice love
yeah,
notes from the IRS saying you owe us this, and I was like, "Crap, I didn't know."
God, mm,
The
we'll see
trend,
though. But when it
see
comes
the
to
trend
dividends, guys,
line.
Microsoft steadily pays quarter by quarter.
Hmm.
Look at that. They don't miss, man. Actually, were they paying dividends in the last crash?
I don't think they stopped. They've never
Is it
stopped.
something to rely on?
Hmm. That's one thing. Most of the stocks I'm in during
Come on.
the COVID drop, they stopped. None of them actually stopped, except for Disney. None of them stopped paying dividends. But Disney stopped, I think, before the pandemic.
Yeah, Disney's been getting, I would say, some backlash from all the wokeism they've been doing.
Oh yeah, go woke, go broke, right?
Yeah. I don't know. That Avatar movie, I wonder how they did, but we can get to let's get to JPMorgan, our first bank stock.
Hmm.
JPMorgan Chase. I'll tell you, like outside this company, this is like one of my favorite banks, just because I've always had a good experience with their customer service. It's never had a bad experience with them.
Did I ever tell you
It's like the best input.
someone on this podcast used to work there? I can say that now because I'm not there anymore.
Oh,
Yeah.
is it a good experience? Like,
Oh,
look at that big box.
it's a book worthy experience. Let's put it that way.
Look at that.
Yeah.
Huge move up.
Hmm. Actually, so they offer employee stock
What's this?
at a 5% discount, and basically they were trading at 170 before, like in early last year, they were trading at 170. They've actually come back.
Mm.
Stupidly, you know what I did? I sold a covered call because I have over 100 shares. So I sold a covered call and the stock
Mm.
did this. So I'm going to have to roll the trade. Otherwise, the way covered calls work, when you sell a covered call, you collect the premium. And if it goes up, you lose money. Like you would have to buy it back at a higher price. But
Oh,
yeah,
I see.
this one, if you look also, I want to say it bottomed out in October.
Yeah, let's say the bottom was around October 3rd. Wow. Isn't it so awkward? All these companies do the exact same thing near the exact same time.
Hmm.
Whew.
It's cyclical.
Let me see. So They got I mean, their dividend yield is not too bad, 2.87%, similar to your savings account. Let's see, their ex-dividend date was earlier this month.
What I like about this dividend is that it pays basically $1 a quarter if you look at it, because there's 4 quarters in a year, and it's like a $4 dividend, so it pays $1 a quarter. So like, because I held this in the 401k, like the common stock plan, and I had employee stock, so it pays like a nice dividend every quarter.
Nice. Oh, actually, if you get a 5% discount, do you guys get any? Was there any other discounts, any perks? Because I haven't talked about perks owning stocks in like a long time.
Mm-hmm. How do you mean?
Like,
how do you mean perks?
Yeah, so there's 3 reasons people probably buy stocks. Capital appreciation, dividends, and perks. So if you buy like a coffee company and you own some of X amount of their stock, they can give you X amount of coffee at a discount, for example. Like
Starbucks?
Yeah, maybe. I don't know about Starbucks if they give you discounts on that, but if you own enough stock in some certain companies, actually, let's Google that real quick.
The first time, like Starbucks was one of the first. Starbucks was one of the first stocks I bought, and I remember I walked into one, and I felt like, yeah, I'm a shareholder, and I walked into one like I was part owner, and that's one that did really well because they split a couple of times. I sold them too soon. I think they're like I say, everything's coming back. Whatever they said in the Fed meeting last week, it's really boosted the market because everything over the last like 3 months, everything's coming back. Yeah, Starbucks is back to 107, but it peaked at like 125.
All right, here you go. Shareholder perks. Now, I can't verify any of this, guys. This is just a blog I found, a website. But here, just for conversation purposes. Okay, let's see.
Berkshire
our first
Hathaway.
one up is, if you're a shareholder and it's possible to qualify for 8% discount on. Oh, wow.
I didn't know that. I have Geico for my insurance.
And 8% discount is actually really big. But
do you have to own a certain number of shares?
If you're a shareholder, maybe you just own 1 share.
What about a fractional share? I'll go buy a fractional share right now, and then I say, hey, I want my 8% discount. You know what I did? This is completely unrelated, but a car insurance hack that I've never talked about on here. So car insurance, like everything, they keep going up every year, right? So, I'd call and I'm like, hey, why did my insurance go up? I'm a safe driver. They say, oh, the cost of doing business in your area. And I finally told them, I said, well, guess what? The cost of keeping you got too high. So I went to Progressive for like 6 months because they gave me a better deal. And then Geico like begged for me to come back. And so they offered me the rate that I got like 5 years before, because that's how Warren Buffett is with his companies. He hates losing customers. So I was like, heck yeah, I'll go for that, Wow.
I mean, insurance, my insurance rate, especially even my small like storage units insurance went up too.
Do you have like USAA or something?
Yep.
Yeah, I figured. I had that before. They were too high though.
But a good relationship though. Really good relationship.
They're good. Oh yeah, I had a credit card with them too. I got a nice perk from the credit card.
100. Oh, how much is this? Royal Caribbean International. If you own 100 shares.
I have Carnival Cruise.
Hey, let's look that up real quick.
The other
I know it's off.
If you own 100 shares, like of that, you can do covered calls against it too.
Oh wow, this is I know it's off topic, guys, but this is part of the whole stock conversation. You see, $63. No. That's it.
Look at the EPS. Look at the EPS, -21.
Whoa.
Yeah. No, since the pandemic, it was like a free fall. See that straight line? It dropped to like 20 something. It's recovered since. Yeah.
I'm seeing. I haven't been on like happened to these guys. It's crazy. You start going through a whole bunch of these different companies. Like, there's so many companies I did not even know that they're doing bad. Oh my God, look at that. Holy crap.
It's like a roller coaster. It's like,
I mean, they are recovering pretty good.
Yeah.
Oh man, look at that.
You know what infuriates me? I don't know if you fly much, but the airlines, just the way they got bailed out by the government, and they haven't done squat for the people. Like all these canceled flights, all these logistical issues, and they got bailed out. And it's like, what the heck, you know?
I mean, to be honest with you, they shouldn't have been bailed out, but
well, they would have gone bankrupt if they didn't. But the thing is, if the government's going to bail out companies, like, at least help the people. Like, have on-time flights, have better logistics. You know, don't screw them on credit card rewards, like what happened to me. You know.
Once the government gets into the business of bailing out companies, then you know they have a special interest into the company.
Right.
Ooh, look at this. If you own 100, if this is for Ford, would purchase 100 shares for a few days, they buy a car, they almost immediately get, so you get some type of rewards on your car. Aflac.
AMC.
Oh, another cruise line. It's kind of interesting. There's 2 cruise lines. What's 3M?
Oh, the tape. Don't they do like tape and stuff like that, or like some kind of like stickers or notes, office supplies?
Oh, Kimberly Clark. Okay, so I mean, if you guys read through, I am scanning through, but if you see, there are companies that gives you perks. So if you are going to buy a stock, you're going to plan to hold it long term outside their dividend. Maybe they got some good perks that you can get part of. Like, ooh, iRobot. What is that?
Oh, that vacuum cleaner, like the thing that just operates by itself. I didn't even know that was publicly traded.
Me either. Offers this. Oh wow! So if you own some of the shares, you can have discounts on the robots.
Negative EPS.
Ooh.
That's interesting. Disney.
Walt
What's the perk?
Disney.
What's the perk for Disney? No discounts on emissions anymore. Shareholders collectible stock certificates. Their certificates are works of art. I wonder if it's like NFTs. Very suitable for framing. Okay, interesting.
Whoa. This is an easy website, guys. Just going through some of the dividends. I hope you found value in that. Let's see. We went through JPMorgan a little bit. Now Blackrock. Oh man, this is my this is. Whew. Actually, let me bring up that funding package. Here,
yeah.
In a second.
There's a company called Blackstone that is also like the one publicly traded hedge fund. They have a lot of interesting investments too.
Yeah, it seems like BlackRock, their investment strategy is government. All right, let's see. Okay, so this is just off of CNN, guys. CNBC. Now, I haven't done all research, reading off the article, letting you guys know where I'm seeing this at. So this is the Ukraine. This is so the United States is passing that $45 billion aid package to the Ukraine, which is, to me, should be unconstitutional. But besides that, it should be highly illegal. But this guy here is going to be dealing with BlackRock for the rebuilding purposes of their country. BlackRock, we should see some big upward momentum since this happened. This was reported on December 28th. So let's look at the company since then.
So great future cash flows coming for BlackRock, right?
BlackRock, yeah. I mean, I feel like a politician. Like when I.
This is funny. Speaking of that, there's this meme with Zelensky. He says, "Where's my money, Joe?" And he says, "Relax. 87,000 IRS agents are collecting it now." See? Yeah.
Oh my god! Look, ever since that deal came out, like this is such an easy trade because it's so out there. I just Googled it, so it's not, like, guys, I didn't do hard research. Like, look, this came out December 28th. Look at the little cup. Made a little cup and then it's taken off.
But the thing is, Blackrock is such an expensive stock. It's $7.54 a share. So you could do options on it or fractional shares. I tell you,
like, options, fractional shares, or how I buy through my broker, and I can just buy through lot sizes. Kind of like an option, actually. Very, very similar. This is leverage buying, and you buy what they're considered lot sizes.
So it's not whole shares?
No, I don't even get the benefit of any type of what is it? So if you buy the way I buy, every day you have to pay a fee, a daily fee to hold the trade, and then you also have to you don't get any of the dividend payouts at all. You only get speculation. That's it. But that's how I trade. I trade just like that all the time. So there's benefit for me to do it. I don't recommend it for everybody because it's a lot of risk, and your stop loss has to be very tight, like extremely tight, or the fees get rather expensive.
Yeah.
But look at that right here. Look, this took off, and we might be seeing Blackrock head back into the near thousands. And you can see that the dividend. Look at the dividends since 2003 till now. Strong dividends, guys. So if you're looking at getting into a dividend stock, I don't know. Actually, now I know. They pay $19.52 for the year at 2.59%. So they're not the highest yielding company, but they're consistent. They're dealing with the government, so they're getting paid. Oh my gosh. What else? Our next one is Tesla.
Oh yeah. Is this prime for a recovery?
To me, this is one of those stocks that I completely avoid. Like when I see stocks that are very, very volatile, I typically stay away from it because it'll mess up my robots, mess up my trading personally. Because it's just too fast. Like when you get knocked out of a trade, and you're like,
even for options, it's crazy. Look at that straight line.
Whoa.
Crazy.
I mean, I can see people buying right now, $100 plus $130, $120 pop up a little bit. Give me a second. It doesn't seem like a bad buying point, but actually, I don't think the momentum is high enough. So for me, if I had to buy at this point, I would have my computer. You me like looking at it now, I would avoid it. There's not enough volatility right here for it to be. It looks like it's going to trend back down still, even unless the Fed starts.
There's not enough compared to how it was before. There's not enough like buying momentum to offset the selling.
Yeah. Actually, there's a video that I want to discuss about Tesla that I have it on my to-do list. 1 second. 1 second, guys. So this is a video that is not mine. George Gammon made a video about Elon Musk, how Elon Musk is making a massive gamble on all his companies to purchase Twitter, which is making him over leverage. So he may be over leveraged to a point where he might lose them all. But,
wow.
Yeah, I have a good feeling that Twitter might actually start making a profit and might actually pull him out of the weeds. Let me see.
Yeah, I got forced out on my Twitter stock.
Boom. It's interesting. Like so many companies, I just like when I look at it, like, ugh. So try this, guys. Check out this video by George Gammon. Really good video about understanding his position, Elon Musk's position, how he's extremely, very close to being a very risky bet. Like he can lose everything or win everything, and he might actually win because I think Twitter is much better now than it was when it was a public stock.
Really?
Oh my God, Twitter. Yeah, it's the upgrades. It's faster. I don't have to be worried about getting censored. I got more retweets and likes when I talk about basically not so good topics for social media, especially YouTube. If I talk about COVID, or retweet from if I say anything about COVID, it doesn't do good. The video, it's very interesting. Any video that I make about what you're not supposed to talk about, it always gets like 20 views. But then if I make a gold and silver video, 100, 200 views. So it is not going to be pushed. But when it comes to Tesla, guys, this thing has $3.24 per earnings per share. PE ratio is relatively high, sitting at 37.78. For me, anything over 20 to 25 is way risky. But if we go to Amazon, I remember Amazon being their PE ratio like over 200.
Yeah, I remember that. That's when I thought it was overvalued. Actually, this is low for Tesla. Yeah, almost less than 38. Earnings are coming out next week.
Yeah. Oh, wow. That's probably why we're slowing down a little bit right here.
That could be an interesting, like I said, even options are risky with this one, but and it's going to be hard for them to beat earnings because the projected earnings, if you look at Yahoo, are much higher. Yeah. It's going to be hard for them to clear that hurdle.
It'd be interesting if they clear this, like just like jump it up to say hypothetically, instead of being at 1.16, this says 1.5. Like it's
if the projection was where it was like 2 quarters ago, I would be all in. I would do options. I'd get like 10 contracts, but it's not. So
we'll see. I'm betting for this guy. I mean, I don't know if Elon Musk. I don't know him. I don't know him personally, but if I can have a conversation with him, I want. Yeah. Nah, it'd be nice to I want to hear his freedom talk, his constitutional talk, not his company talk.
I wish he could run for president, but I don't think he can because he wasn't born in the U.S.
Yeah, I mean.
But that didn't stop other people, right? Just kidding.
We have so many presidents that I don't know how they made it.
They're part of the system.
They would have to be. To be president these days. These days you don't even need to remember you talked to somebody or remember in general.
Yeah, like Biden, he doesn't remember anything.
Yeah. I don't know how people voted for him. But
did they really?
Here we go. Our next one is Visa. Now, I bought into Visa and sold it a long time ago. Some companies that I wish I would held on a lot longer, but it's fine.
Visa is one that I've never really looked at.
31.
Yeah, Visa is so expensive. I've never really had it cross the radar. Actually, in the last year or so, this used to be at like $400 a share. Let me see.
Look at this. Visa, and I got their dividend payouts right here, guys. Give me 1 second. Oh,
did they split? This stock must have split because I remember the stock being at close to 400. And they pay a dividend, not much, but see, their earnings come a day after Tesla. They typically beat earnings every quarter. So let me see something here. Has Tesla?
Oh yeah, they do beat their.
Yeah, has Visa split?
Ooh. Monthly earnings per share, 1 year target estimate, 251.
They split twice.
Let's see.
4 for 1.
Dang, these movements are big.
Mm-hmm.
Yeah, I really don't like when companies split. I mean, I understand why. I understand why they split so they can get more, basically, be a cheaper price for people to get into. It just
Yep.
makes things complicated, especially if you have an odd amount of shares.
Mm-hmm.
Get refunded in cash. And you're like, I don't want cash. I want stock. I want more shares.
Right.
Let me see. But Visa, guys. Oh. Let's see. So another strong dividend, guys. If you're looking at, if you got into this company 10 years ago, even before then, this thing would have been nice to get all that $1.80 per year, but the growth would have been amazing.
Yep.
What else? Home Depot. So Home Depot actually has perks.
That's always a good one. I mean, that's a solid. People are always building and stuff.
Give me 1 second. I'll bring this up to you guys. Stock perks.
I wish I had a lot of money like 10 years ago to invest.
So,
I'd be rich by now. Looking at all of these.
10 years ago, yeah.
No, looking at all of these, how well everything did over 10 years.
Yeah, it really would have been nice if I was more heavier into these big companies. I mean, I guess I'm more into precious metals. I think that's going to be the best wave out of all companies. All more than equities, more than real estate. I think precious metals is going to outperform everything. Oh wow, look at that!
Home Depot's rolling.
Over $400. Hey, let's see. Dividends actually not too bad. 2.3%, almost same amount as a savings account. Not too bad. Stock price
some of those
obviously is recovered.
Some of the savings accounts, I mean, some CDs are paying like 4%, but you got to tie up your money for a while.
Yeah, me personally, I like CD accounts. We go to bank rate, guys. Bank. So best CD.
Yeah. Real quick though, Home Depot. If you look at the earnings, the February 21st earnings come out. That's a good play for what I call an earnings blast trade scenario, because if you look at it, they should definitely beat that. See the projection? They should absolutely beat that. You see?
Ooh.
Yeah.
If they do that,
trade call options on it. Not advice, but that's something I might do.
It's actually pretty interesting. They're not too far away from their peak.
Right. Yeah, they were peaked at like 415. This is a stock I've never owned.
Yeah, 415 3.
Home Depot and Lowe's, to me, they're like the same.
Yeah.
Lowe's is a lot cheaper though.
For me, they're both cheap. I get that 10% discount.
Oh yeah, military. Yeah. Does that apply to the stock too? That would be nice if it did.
Yeah.
Yeah.
To go back to what you were talking about before, guys, if you're looking at CD accounts, I think that you go to bankrate.com, check out some of the best rates. So some at 4.15, 4.3. Now they're not going to beat inflation, but they're going to help. It'll be better than getting zero. Goldman Sachs with Marcus Goldman Sachs, 3.7 to 4.4. Not too bad. 4.6. I actually have this bank here.
Which one?
Citizens. Synchrony.
You have Synchrony? Yep. Oh yeah.
I bought a bed from I bought a bed from Ashley's Furniture. And I got it through financing at the time. And then I'm like, okay, I already got the bank. I'm just make a bank account. So I'll open up a bank account with them too.
Oh yeah. Cool.
Synchrony, Capital One, Marcus.
A lot of these give perks for like opening a checking account with them or something. They give perks.
5-year. 5-year terms. Ooh. Let's look at 1 year. That's pretty high. 5 years. It's not too bad. 1 year, 4.15, 4.3. Huh. savings accounts. Let's take off CD accounts real quick. And now we're actually shocked. Is that actually a big difference from savings accounts and CDs? 4% for a savings account.
Mm-hmm. With PNC Bank.
Capital One markets. So if you guys, oh God, Wells Fargo, who does that? Chase, ooh. Who's Bread Savings? I gotta check this out.
I think they showed up on Credit Karma.
Let me see. I never heard of this. I look at this all the time. I've never heard of this company. I'm putting this on my to-do list. Oh heck yeah. 4.5? I mean, what I've done is that you guys use Zelly or Zelle, or you know that
Zelle
stuff to transfer money.
Chase.
Yeah. So when So for me, every time I've seen higher interest rates, I would just cycle my money back to the other account.
Well, and then they have like checking account churning. So like a lot of these pay perks if you open an account with them too.
Ooh, set that up. Actually, before we do that, we're at Home Depot. Our next one is Nike.
Oh, Nike, yeah.
I've never bought this stock.
Wasn't the quarterback Kaepernick? He was the spokesperson.
Ugh, God, Kaepernick.
Great choice.
How? Great.
And then their stock went up.
Choice.
Yeah, but their stock went up after they made that choice.
Oh,
we got a live viewer.
That.
Got a live viewer. Has a question about 401k.
How do I see that?
It showed up in the comments. I noticed the comments were here. So just keep talking.
I have to go to here.
Last podcast,
we can answer that after.
Yeah, but the last podcast after the fact, we got some. We had a troll, or we had someone that wasn't happy with what we were saying.
Oh, yeah,
they commented. Oh yeah, they commented like 10 times. Yeah, they were upset about some of the stuff we were saying about like the pharmaceutical companies and stuff.
I just said, like, if you're in finance or just in trading and investing, you have to be political. You have to see that BlackRock. Come on, like that's just, I googled that in like 30 seconds. It's like BlackRock Ukraine deal. Boom. What do you think they're having to their stock price?
BlackRock.
Yeah, and then the secondary question would be this: which politicians own that stock?
Of course, yeah. Okay, that's an interesting question. I'm trying to figure out how I'm going to answer it. Let me see. Well, that's good. I mean, so law enforcement, no 10% penalty. Me personally, I keep everything aggressive.
Oh wow, I'm in the chat too.
Yeah, right. Yeah. See, so that's the way. So when the market drops, your investments are going to drop too. That's the conundrum, right? But when the market goes up, your investments should go up too. No guarantees on that, but they should go up. So that's what I do. Like for me, yeah, I'm all aggressive personally. And I got crushed last year, but it's starting to come back this year. And I'll take 4 out of the last 5 years. Like a good example, large cap funds in the 401k, which I'm a big fan of. They were averaging like 30% a year in the last, 4 out of those last 5 years. They were basically averaging like 30% a year. That, the S&P. And see, the thing about a 401k, you're constricted to what your employer offers. Like for me, because I have a 401k from a previous employer, I almost want to roll it into like just a separate, like it's an Ameritrade account or some other broker, because then I can do my own stuff. I'm not confined to the funds that the employer had offered. So Yeah, as far as like Roths are great. I think if you could do both, do both. Like max out your 401k, and do the Roth if you can. That's what I do. I think it's great if you can.
Interesting. So he's 51. Can you here? Let me ask. Hey,
I just can't believe we have a real viewer. That's awesome.
Awesome.
Making progress.
Hey, are you going to be taking out Social Security or basically pension benefits once you hit your I think it was at 63, or are you going to wait to 65 to get full?
The state puts 5%
of my salary in my 401k. Wow. Yeah. So he's taking the early one, not the full. Okay, 62. Okay. So to ask you a question, just for you to ponder, when you turn 62 and you start claiming Social Security, what amount do you think you'll be getting? And do you think that the dollar has a higher purchasing power now versus then? Because when you start getting, taking away from your 401k and Social Security, will it be enough to handle your lifestyle?
It should tell them on the site. Like if you create a Social Security profile, it should tell you what you'll get per month.
We have a supplement until 62, around $600 a month. So at $600 a month, will basically the purchasing power that you currently have be available. So to say this, $1,600, what can it buy today versus for you 12 years from now or 11 years from now? Because like $1,700, like 20 years ago was amazing. 30 years ago was amazing, but $1,700 now, I mean, in Vegas, you're barely covering rent and a couple utilities.
Yeah, same where I am too.
Yeah.
So if it was 1,700 like 10 years ago, that would be. I'll do that real quick. It's like 4. I factored 4% a year for inflation. That's equivalent to like 2,500 now, with 4% inflation.
And 11 or 12 years from now, when you start claiming it and start earning it as an income, or I don't know if that'd be a primary income, I have no idea, but most likely it's going to be a whole lot less. My state retirement plus supplement will be about 75K. Oh man, how do I say this?
Going back to a point above, if the government defaults, we have bigger problems than just our investments losing money. But I don't see that happening. Hopefully not.
They won't default. Honestly, the government will always default inflationary. They'll just keep printing.
Yeah.
But no, I will get a state retirement till I die. The question is, how do I say this? You may earn. This is for you to ponder. You may earn income. That's fine, but it might not buy anything because your purchasing power may be so devalued that it's not worth as much. That's the problem that I see with 401ks and long-term assets in dollars.
So, none of this is advice, but I mean, if
I was in your position,
I talk about things that I do, or that I might do personally. I'm younger. I like to be more aggressive, but
agreed.
Things are different. Well, things are different. Like, if you're older, then it's a different situation. It all depends.
He says he has no bills. I mean, that's fine, but I tell people, like, what can we can guarantee two things in the future: inflation, which is what? A tax. We know that taxes never go down. Every single year, from year upon year, taxes will go on. There's an upfront tax when you make a purchase, and then there's a back end tax, the invisible tax called inflation. These two things are never going to go down. The direct tax may be lower, but the overall purchasing power will be less and less. So that's why when I tell people, like, when you're looking at dollarized assets, 10, 15 years from now, measured in dollars, may be higher, but the purchasing power may be crap. So when I turn 62, I'll have my 401k, state retirement, and county retirement.
That's great.
I mean, that's better than most, but I would say if you have time, there's actually a book to help you out. Give me a second. Where did you go? Where did you go? Where did you go? Oh man, I can't find my book. What was I reading last? Oh. Can't find it now. Oh, found it. It was right in front of me. All right, here we go. So if you have time, who do I know can retire at 51? What do you mean by retire at 51? Like, do you mean retire without a job? Because I haven't worked a job in many, many years. Does that mean retirement? What is that? What does retirement mean to you? If you have time, man, read this book. It's free online. You don't have to buy it. You don't have to purchase it. But read this book. It will help you with economic history and to tell you about people who want retirement. To sit, you may get paid, but it's not going to be as much value. You might want to make a secondary plan, if I can put it like that. I have healthcare paid for the check outcoming in every month, and dental and much. Like, oh, actually here, do you have that chart with the do you have that chart for the debt clock still up?
I can pull it up again.
Yeah, this can help him out personally.
Yeah, let me actually just go to debt clock. You have the screen share. Just go to debt clock.
Oh yeah. Give me a second. Is that I'm happy we have an individual that can actually see these numbers. So instead of us telling them what it is, they can see it for themselves. Will Social Security have the amount of money that he perceives? Because if they run out of cash, what happens to their guaranteed payments?
It depends on what the government is able to do.
I mean, they're going. I have a good feeling that this will be interesting. So for our viewer, if you have time, just do some research about what happens to a government's purchasing power long term. So I can't tell you what to do with your money. I don't want it. I don't want to tell you what to do with your money. Just give you options what to think about. If you start going through how much debt America has and a purchasing power, what is going to happen if there's a deficit in actually there is a deficit in our Social Security system. So just take that to ponder that we might not be in the best. America might not be in the best situation 11, 15, 20 years from now. Because we're barely covering. We don't even pay our bills now. We get loans to pay all our bills now currently. Purchasing power chart. And here you go.
It sounds like you have a great situation. I don't want to say too much specifically. I mean, we're just YouTubers, so. But yeah, I mean, it sounds like you have a great situation, just from what you're saying.
Yeah. Looks like he's better off than most. The other people I've talked to about this and seen the numbers on, the only thing they're banking on is the Social Security.
Mm-hmm.
They're like 401k what person.
And that's not what it was designed for. That's the thing.
I think that the intention was to take the money and abuse it.
Yeah.
I mean, the whole beginning of it, like since 1913, that whole thing has been crazy.
Mm-hmm.
All right, here you go. I got a chart for you. So remember, I'm not telling you what to do. He's not telling you what to do. You can do whatever you want with your money. I'm sharing important information that's going to help you, help any American. There you go. So this, I found a chart that makes it a whole lot easier it makes it more visually aesthetic for people to look at. You see this dollar chart right here since 1913, and you see today, right?
Mm-hmm.
If this continues on to 20, so you're talking about like 2040, around the year 2030, 11 years from now,
Mm-hmm.
the dollar's gonna have less purchasing. So this might make things very difficult for all Americans. Much, much more difficult. And oh man, look at that. I like this animation right here.
2022 was a rough year, I think, for everyone.
Oh yeah.
Mm-hmm.
But I hope this gives you some insight or some information. I have over $1 million total.
Yeah, that's all good. Sounds like you're in a really good spot.
Yeah.
You know, good for you.
I hope things work out. If you're managing yourself and you're winning, man, yeah, I just tell people, like, there's a perspective that you can see from this. The majority of Americans are going to get hammered by inflation over the next 10, 15 years.
Mm-hmm.
But if you know that, you can create a plan to win off that, because remember, there's going to be people who do win in this area.
Mm-hmm.
You save? Ooh, interesting. But I hope that helped you out, man. If you have any other questions, just type it in the box.
Yeah, good discussion. Did we have any other? We were looking at. We had like a list of stocks we were looking at.
Yeah. Our last one is Disney, and that's it. DIS.
Mm-hmm. Yeah, they're starting to come back too.
Yeah, this one. Disney stocks. Let's see. Oh my God, their PE ratio is bigger than Tesla's.
Yeah.
Oh my gosh. Earnings per share, barely. Walmart to split. Oh, want to look at Walmart right now, or continue on with Disney?
Yeah, we talk about
Walmart
Disney.
was splitting.
Oh, I don't know. I actually I was in Walmart a couple of years back.
Ooh. I mean, Disney did a double bottom right here. Strong double bottom.
Disney doubled from where the pandemic, like the bottom, it came back and it doubled in like 2021. But then it just, yeah, you're right, double bottom. But see, it's starting to come back.
Yeah, I mean, yeah, to me, that's an obvious indication of it coming to bounce, especially on the monthly. I'm sorry, we're on the weekly. The weekly is going to be bouncing hard. Let's see some other financials from them. PE ratio is way too high. And do they have it? They don't have a dividend yield. When was their last dividend yield?
Oh, they stopped their dividend in 2019. They stopped their dividend. They used to pay twice a year, but they stopped.
Probably losing too much money.
Yeah, I think
just
they were.
Sorry for the low loading speed. What about what's the projections? Oh wow, they did way worse. Actual. Well, let's see.
They
like this right here. I don't really use as much for stocks at all. Their earnings.
See, Yahoo has everything I want to see, and it's free basically. So I like that. Like it shows me earnings, it shows me stock price, things like that.
Wow. Let's see what people think. Strong buy, recommended trends. It's a buy.
Huh. These analyst ratings, they can't be. They're not perfect.
The only thing, this would be an obvious buy, just because of the double bottom. But like I've been through the numbers of weekly and monthly double bottoms. They always bounce. Not always, but there's a higher probability of them bouncing off this right here. And for a short-term trade, you're 2 weeks in profit if you caught that doji.
Mm-hmm.
Oh wow! Thank you, Mr. Elliot.
Yeah,
Jameson.
thank you. Yeah.
All right. Hey, he's made this all worth it.
Yeah.
Hopefully, maybe it's just the things recovering, the stocks and stuff.
That's what it looks like.
Ooh, let's see. So that's Walt Disney, and our last one is Netflix. What is Netflix?
Yeah, Netflix. April of last year. Oh, it's NFLX. It bottomed.
Not too bad. Let's see.
You know, Jim Cramer said last January that it was going to keep rolling, and then they talk about inverse Cramer. Since November 8th, 2021, it peaked.
Yeah,
and then it bottomed out in May, which that looks like that would have been the great time to buy.
Holy snap! Look at that.
Mm-hmm. And it's recovered. It's actually up.
I gotta start looking at some of these big companies. They're more.
That's what I'm saying. See, people start ignoring the big companies. Like once it's like, okay, they've taken off. Like forget them. When Amazon was rolling, Google, all these companies, they were like, oh, let's forget those and then look at. But you should keep looking at the big companies because they can keep going. A lot of times they're not done. You know, they're stable, but they still have room to run.
Ooh, we'll see. I mean, I bet you Netflix was going freaking crazy when they were dropping like this week after week.
Mm-hmm.
Actually, I want to see, does Netflix subscription did it increase during this time frame? Let's see. Did Netflix subscriptions increase? I mean, to me, the Netflix is not like I pay for Netflix, and I never, ever would ever even think about canceling it.
Really?
Yeah, I watch it pretty much. If I ever watch TV personally, this is like the place I would go to, or I go to Amazon and buy a specific movie. Like, remember the movie called Heavyweights?
Mm-hmm.
Yeah, I thought that's on my list to buy next month. I buy like one movie and then watch that Heavyweights, and I bought The Breakfast Club not too long ago.
Oh yeah, you actually buy it from Netflix?
Yeah, no, Amazon.
Oh yeah,
and then stream it because Netflix doesn't have everything.
Mm-hmm. I know. Well, my frustration with them is that they would lose stuff. Like they constantly would lose stuff to other platforms, but every platform does that now.
How did they give me what I want? How much did? Okay, here. How much did Netflix price increase lead to subscribers loss? Actually, this article talks about it. I mean, to be honest with you, it doesn't seem like many people would have an issue paying for Netflix. It's just a very small amount.
Even with the increase.
Yeah. I mean, how much does Netflix actually cost? I think it goes from $6.99 to $19.99.
That's what it used to be.
Yeah, it's not that expensive. I mean, back when I was a kid, I remember getting VHSs more VHSs per month than what they cost. Oh man, I remember those days. Yes, I think the young people don't even know.
VHS.
Yeah.
Yeah.
It's funny. Blockbuster had that opportunity. They thought that we're going to be on VHSs forever.
There's a good documentary. Netflix, like at one point, they begged Blockbuster to buy them, and they just laughed them out the door, basically. And I bet now they wish that they would have done that because they didn't evolve.
I think there's only one Blockbuster left. And it's used as a museum, I think.
Yeah, it's in Oregon, I think. Hmm.
Gosh.
There's actually a Netflix show about that blockbuster. Yeah.
Oh my god, it's so embarrassing. Like we lost our entire company because we failed to change.
Hmm.
I mean, they could have they had the funding. I bet even them at the time, like, hey, maybe we're not going to do VHSs forever. Maybe this whole DVD, CD thing might be a big thing.
Hmm.
What I found, the biggest change that I find is in cell phones. Cell phones from the giant brick and what's it called pagers to having a device.
Hmm.
Gosh. Something I did not see coming.
Hmm.
Actually, what's that big company? BlackBerry. Is BlackBerry still around?
Yeah, they are. They do different things now. Not so much of the devices. They actually do work apps and stuff.
Oh wow, BlackBerry's at $3. Oh, okay. Before we conclude this, I'm gonna look at one stock that I'm gonna look at BlackBerry real quick.
Hmm.
Oh, the things that come up in conversations.
Hmm.
Well, what is this? BBT. Whoa.
Yeah, see?
Oh my
They had their
god.
run in like 06 and 07.
I mean, they're oh man. I mean, they're. I have to give it to them. They're still alive.
Hmm. I don't know how, but yeah, they are.
I wonder who buys from them.
It's mainly like businesses. They do like business, like mobile apps and things like that.
Negative earnings per share. Ex-dividend date was 1999. Oh my gosh.
In 1999. Yeah,
I mean,
I see stuff like that.
maybe if this is, oh, this company's unbuyable for me.
Is it $5.42? Negative earnings.
I mean, this is in CAD,
Yeah,
but I think they can come back. I think they can come back if they get like a what's it called, the Wall Street bets. If they get on their radar.
that's true. I'm surprised they haven't. You know, a funny thing. So I'm in that Facebook group for the Wall Street bets, and a lot of these stocks are starting to come back. Well, Bitcoin is coming back for one thing, and then there was a couple other ones that were starting to, within the last week or so. I think AMC had a little bit of a run, but if you follow that group, I'm trying to think, you could almost follow that group and those stocks, like just follow what they say, and just because they're talking about it, I think there's enough of them to like move the market.
Look at AMC. I remember even the YouTube channels that I follow when it comes to trading, they say the same thing. Like,
Oh yeah,
if you're gonna get into AMC, do it because it's for fun. Don't do it for money, because
right.
you trying to make money off of this is going to be way too volatile.
Right. I've got one more thing I want to
that,
share that I'm gonna have to drop in like 5 minutes, but I've got one more thing. Pull up. So there's three. If you guys like dividends, well, for one thing, I mentioned the UPRO, which does 3 times the S&P 500, and it's optionable. But SVOL and JEPQ, the dividends in those two are phenomenal. Yeah. So the UPRO, it's the
so 3 times
S&P.
UPRO, sure.
Yeah, yeah.
Okay. What's the next one?
SVOL. It's a simplified volatility ETF. SVOL.
Interesting. Is this in my computer?
What's that?
Interesting. And the next one, I have an ETF tracker an ETN tracker for high leverage calculator.
Oh, really? Oh, so you might find it there.
It's something I programmed myself. Like it's a personal tracker of highly leveraged things.
Mm-hmm. Interesting.
And what's the third one?
JEPQ. It pays like a 16% yield right now anyway.
Wow.
Wow, we have a lot of views on this so far.
Yeah.
Awesome.
Maybe maybe next week we can just do let's see, we did dividends and stocks. Maybe maybe retirements, long term. We can do that. Maybe that's probably a good thing. Maybe that's the guy I was talking about. He's talking about retirement. Maybe we can just go over good retirement assets.
Yeah, that's true. Like an idea of a 401k. But anyway, okay, with that, I'm gonna have to drop. Yeah, those are the three. Yeah, those are good ones. You see the dividend yield on those?
Daily return year to date, 2%. The heck? No way. I need to go check this out a little bit more. This is see, that's what I like about these conversations. We talk about things I don't even look at.
Yeah, same with you. Like you teach me stuff I don't know either. So I was gonna say, if you want to keep going, you want to analyze these and stuff, keep going. I'll just drop.
Oh no, it's
all
you
got to do
is go get some food. I guess.
Oh yeah. All you got to do. Oh yeah. Okay.
Let's see, but before we go, guys, subscribe to this channel, THB Life Enriching Finance and Coaching. Check my channel out, Andre McClendon, same as the name right there. It's been a lot of fun. We got one guy talking about.
Yeah. For sure. Yeah. Yeah. I still haven't come up with a better name for my channel. So.
That's pretty good. I mean, I had something like I wonder if I put my name versus if I put a real title like I talk about everything. Like, that's my channel. I talk about everything.
I have some other, well, like there's that one, Let's Talk Money. Like some of them are really generic. I have another one called Gen XYZ Investing that I haven't done much with. That's the one I was going to get going for automation and stuff. But yeah. Anyway, all right, guys. Yeah, that was fun. Thanks for the comments. And yeah, we'll be back hopefully next week.
Yeah, it's going to be awesome, guys. I cannot wait. Yeah. Also, if you want to check out my channel, I'll just leave the link in this description.
Yeah, I'll put it in the description too.
Oh, I put my website.
Yeah, we can put all that in the description for sure.
Oh yeah, but check us out, guys. It's been a lot of fun, and I'll see you guys next week. Hopefully. All right. Yeah, I'll talk to you off camera about it.
Yeah, sounds good. Okay, let me end broadcast. Let's see.